Thank you for joining us at xm.com. This is the Weekly Outlook. I'm Christina Marujos. With me today is lead investment analyst Rafi Ajian. Of course, we'll be having a look at the main themes of the upcoming week. Rafi, we had a barrage of central bank meetings this week, but the upcoming week starts with the PBOC decision early on Monday. We already saw some moves on part of the Chinese government to try and stimulate the economy in the midst of the property crisis. Therefore, it will be interesting to see what policymakers signal. What are we likely to see at Monday's meeting?
Well, Christina, there's been some talk that the People's Bank of China might cut interest rates. So although it's taken a number of policy measures in recent months to boost growth in China, which has been slowing quite significantly, it's actually left its benchmark lending rates unchanged since the height of the virus crisis back in April 2020. So the pressure has been growing on the central bank to take even more decisive action to boost Chinese growth because, of course, we've got the property crisis. China has also been experiencing an energy crunch. And, of course, we've got the global supply chain bottlenecks that have, of course, have been impacting Chinese manufacturers as well. So rate cut is badly needed. And most importantly, China does have room for rate cuts because although we have seen a bit of an uptick in consumer price index, it's actually not risen that high yet. It's nowhere near the levels we're seeing in the US. So the People's Bank of China can afford to cut rates, and if it does so, it would most likely provide a significant lift to risk assets such as stocks and, of course, the risk-sensitive currencies such as the Aussie, the Kiwi, and the Loonie.
Let's cross into Japan now because it's reporting inflation numbers for November on Friday. We've seen inflation soar across the world, therefore one would expect a higher percentage in the report. But how could the yen perform?
Well, we're not expecting to see much change, much reaction in the yen. We just had the Bank of Japan meeting. They did take some small measures to scale back some of their pandemic emergency measures, but inflation does remain very low still in Japan. And so even if we do see inflation moving much higher over the coming months, the Bank of Japan will probably not react to it. In fact, high inflation, a bit of high inflation in Japan would be good because it could potentially lift the country permanently out of the deflation trap. We're expecting CPI to hit 0.4% in November. So although that would be a positive step towards the bank's 2% inflation target, policy is unlikely to change anytime soon. So therefore, the yen, of course, will probably not react to the data.
Let's turn to Europe now. It was a pretty big week for both the euro and the pound following the European Central Bank and Bank of England policy decisions. Is there anything else coming up just before the holiday season for the two currencies that we should be looking out for?
Well, it's going to be fairly quiet across the euro area and in the UK as well. And despite the fact that we did have the central bank meetings by the Bank of England and the ECB, the two currencies might still struggle over the coming week because it does seem to have been a short-term rebound because, of course, Bank of England, they did surprise with the rate hike, but there are concerns about the UK growth due to the Omicron outbreak. The ECB, the euro mainly appears to have risen on the back of expectations that the ECB might have been even more dovish, but they were not quite so dovish after all. But despite that, European growth is expected to remain sluggish. In contrast to the US, so the US dollar will probably bounce back soon because, of course, growth there is much stronger. So the two currencies, the euro and pound, will probably struggle for direction in the coming days despite those policy decisions.
And of course, speaking of the United States, just before the Christmas holidays, we're expecting a lot of data releases from the U.S., with the Core PCE inflation report on Thursday probably drawing most of the attention. What should investors expect from the report, and what is the outlook for the dollar?
Well, the US market will be the busiest. We've got quite a bunch of data actually coming up just before Christmas. We've got personal income, personal consumption, durable goods orders, and some housing data as well. But the most important, like I said, will be the Core PCE price index, that's expected to move up from 4.1 to 4.5%. And that's not quite as high as the CPI measure, but nevertheless, it is a concern for the Fed. Now, we did see somewhat of a calm response to the Fed decision. The Fed was indeed quite hawkish, but we didn't get much of we didn't get any panic nor a strong response in the markets. The dollar, in fact, fell afterwards. So there could be some relief that perhaps inflation might be peaking soon, and the Fed taking early action means rates won't peak at a very high level. And also there could have been a bit of buy the rumor, sell the news involved with the dollar as well. However, should we see stronger than expected data in the coming days, not just from the PCE price index, but in the consumption numbers as well, markets might be reminded that both inflation and the consumption in the US are fairly strong, and that would mean the Fed could get even more hawkish over the coming months. So unless we see the inflation numbers start to moderate, the risk to the dollar is to the upside.
Rafi, it was great having you with me today. This was the Weekly Outlook here at XM.com.